Welcome back to Talk Tickers. Today is Thursday, January 22nd, 2026. And if you were watching the industrial sector yesterday, maybe around 4 p.m. Eastern, you might have felt the ground shake a little bit.
Just a little.
We are diving deep into Teledyne Technologies, ticker TDY. And honestly, they didn't just report earnings, they made a statement.
It was a roar, really. We saw the stock close up nearly $58. That is a 10% move in a single session.
For a company this size, that's huge.
It's massive. And for a company that's usually so steady, almost boringly consistent, it ended the day at $623.89.
And we should be clear, this wasn't just a few retail traders clicking buttons.
No, absolutely not. Volume was more than double the average. This was institutional money waking up, looking at the print, and deciding to re-rate this company, like, right now.
Yeah.
For a long time, the label on Teledyne was cautious hold or maybe steady compounder. Yesterday, the market just peeled that sticker off and slapped on high-growth industrial quality.
That's the vibe shift we need to talk about, because for the last year or so, the narrative around industrials has been, well, gloomy.
Right. Everyone's waiting for the recession shoe to drop.
And then Teledyne walks in and effectively asks, what recession? So today we are breaking down their Q4 2025 earnings call. We've got record margins, a very confident management team, and this fascinating string of pearls strategy that seems to be firing on all cylinders.
The setup here is crucial. We've moved past that wait-and-see phase. This report confirmed two major things. One, the defense cycle is durable. We sort of knew that, but this proved it with hard numbers.
That's right.
And two, and this is maybe more surprising to the bears, the industrial sector is showing real signs of life.
Okay, so before we get into the space lasers and the submarine drones, and we will get there, let's ground everyone in the numbers. This was a classic beat and raise. Break down the headline for us.
Sure. Let's start with the bottom line. Earnings per share, or EPS. The street was looking for $5.83. Teledyne came in at $6.30. That is an 8.1% beat. In the world of mature industrial companies, an 8% beat is massive. That is not a rounding error. That is just operational excellence.
And it wasn't just accounting magic or, tax credits, right? This came from actual sales.
Exactly. Revenue hit a record for a single quarter at $1.612 billion. That beat estimates by over $42 million. But here is the key takeaway on the quality of that money. Okay. It wasn't just about selling more stuff. It was about selling more profitable stuff.
You're talking about the margins.
Right. Non-GAAP operating margins expanded to 23.9%. That is a 120 basis point expansion over the prior year. For
those of us who don't live in spreadsheets, can you just quickly clarify basis points?
Sure. 100 basis points is 1%, so they improved their profit margin by 1.2%. That might sound small, but when you are dealing with billions in revenue,
it's huge.
And you are doing this in an inflationary environment where labor and materials are still expensive, squeezing out an extra % of pure profit is just elite execution. It shows pricing power.
Right. It means they can charge more, and their customers, whether it's the Pentagon or a factory owner, will pay it.
They'll pay it. And management didn't sound shy about the future either. Usually these calls are full of hedging. We remain cautious due to macro headwinds, that sort of thing. I didn't hear much of that.
Not at all.
No, the guidance for 2026 feels like a very solid floor. They are guiding full year 2026 EPS to a range of $23.45 to $23.85. But if you read between the lines, the tone on their short cycle businesses was the real signal.
Define short cycle for us quickly.
So short cycle businesses are things where the time between an order and delivery is really short. Think lab equipment, environmental testing gear, simple sensors.
The canary in the coal mine.
Exactly. They are usually the first things to drop when the economy slows down because companies can just stop buying them. Management explicitly stated they believe none of their short-cycle businesses will contract in 2026.
That is a huge statement. That's basically them saying the industrial destocking, where companies are just using up old inventory instead of buying new stuff, is over.
Precisely. It signals that the factory floor is open for business again.
Okay, so the foundation is solid. Now I want to get to the exciting part. Teledyne is often called a beast with many heads. They do deep-sea diving. They do deep space looking. We've organized this into 3 themes. The first one we're calling the eyes of the warfighter.
It's a good name for it. This covers their digital imaging segment, specifically FLIR, which they acquired a few years back.
And FLIR is forward-looking infrared, right? So heat vision cameras.
Correct. But we need to move past the idea of just a handheld camera you'd see in a movie. This is about integrated surveillance systems. And the performance here was exceptional, but what really matters are the specific programs they won.
The one that jumped out at me, and frankly, it's a little terrifying, is the loitering munitions.
Yes, the OPF program, Organic Precision Fires Light.
I mean, talk about a euphemism. Organic precision fires. It sounds like a brand of hot sauce.
It does, but it's military speak for what the media calls suicide drones or kamikaze drones.
Right.
These are unmanned aerial systems that hang around, they loiter in the air for a long time until they spot a target and then they crash into it. Teledyne received their first production rate contract award for this from the Marine Corps.
And Teledyne isn't building the explosive part, they're providing the vision system, correct?
They are providing the payload that allows the drone to see the target. And this is such a critical distinction. In modern warfare, the smart part of the smart bomb is the sensor. That's where the value is. The airframe is cheap, the explosive is cheap, the eye that guides it, that's expensive, and that's Teledyne.
It seems like warfare is shifting so rapidly toward these autonomous disposable assets. But there was another win mentioned that takes this whole concept out of the atmosphere entirely. The Space Development Agency, or SDA.
This is arguably the most insightful part of the transcript for a long-term investor. The SDA is building something called the Tranche 3 tracking layer. Think of it as a massive constellation of satellites designed to detect and track ballistic and hypersonic missiles.
And usually when we talk about space contracts, we're talking about the big names, Lockheed Martin, Northrop Grumman, the primes.
Right, and those primes are fighting tooth and nail for these contracts. It is a bloodbath of competition.
Yeah.
But here's where it gets interesting. Teledyne isn't building the satellites.
Yeah.
They aren't the prime contractor, but they were selected to supply the infrared detectors to 3 out of the 4 prime contractors who won the bids.
Wait, hold on. So 4 companies won the right to build the satellites, and 3 of them are buying the sensors from Teledyne.
Correct. This validates what we call the arms dealer thesis. Teledyne doesn't need to win the massive capital-intensive platform contract. They don't want the risk of building the metal hull or managing the launch. They just want to supply the physics package, the sensor, that makes the satellite actually useful.
It's a hedge against losing a big contract.
It's the ultimate hedge. Whether prime contractor A or prime contractor B wins the satellite build, Teledyne wins because they all need those infrared detectors. The barrier to entry to manufacturing these things is incredibly high. There are very few shops in the world that can do it.
It's like the Intel Inside strategy, but for missile tracking. You don't care who makes the laptop as long as your chip is in it.
That is the perfect analogy. And because these are programs of record, they last for a decade. This revenue isn't going away next quarter.
Okay, so they own the skies. Let's switch mediums. We're going from low Earth orbit to the bottom of the ocean. Theme number 2, underwater dominance.
This segment is called marine instrumentation. It often flies under the radar for generalist investors because it's so niche, but it is a powerhouse. They reported record sales of AUV's autonomous underwater vehicles.
And just to remind everyone, because this is one of my favorite cocktail party facts about this company, Teledyne is the sole supplier of manned subsea vehicles to the Navy SEALs.
That is a heck of a moat, right? When you were talking about delivering special forces operators underwater in a pressurized metal tube, you don't just switch to the lowest bidder on a whim. The trust factor there is immense.
But beyond the SEALs, they discussed gliders. This sounded so sci-fi to me. They said they're deploying these gliders ahead of naval fleets. What is a glider, and why is the Navy throwing them in the water?
So a glider is a long-endurance drone. It doesn't have a propeller in the traditional sense. It uses a bladder to change its buoyancy, making itself heavier or lighter than water, to sink and float. Sink and float.
Wow.
It has wings, so as it sinks, it glides forward. It can stay out there for weeks or months using very little power.
Okay, so it's an underwater plane that runs on buoyancy. But what is it doing out there?
It's measuring the weather of the ocean. Specifically, salinity and temperature profiles of the water column.
Why does a battleship care about how salty the water is?
Physics. Salinity and temperature determine the density of water, and density determines the speed of sound. If you are hunting enemy submarines or trying to hide your own, you need to know exactly how sound waves are bending and refracting underwater.
Ah, so it's like the hunt for Red October. If you don't know the water layers, you're basically blind. Or deaf, I guess.
And exactly. If you assume the water is uniform, your sonar might tell you a sub is 5 miles away when it's actually 10. Teledyne provides the sensor data that gives the Navy that acoustic advantage. They are mapping the battlefield in real time. It's mission critical.
That is wild. It's not just about weapons, it's about understanding the environment so the weapons work. They also mentioned strong winds in Europe for harbor security.
Yes, vehicles diving from 1,000 to 3,000 meters deep. I mean, given the sabotage of the Nord Stream pipeline a few years back, European governments are understandably paranoid about their subsea infrastructure.
Sure. Cables, pipelines.
Exactly. They are writing blank checks for underwater surveillance right now.
So defense is booming, marine is critical. But we said at the top that the real vibe shift was about the industrial side. Let's pivot to theme number 3, the commercial turnaround.
This is the piece that makes this a macro story. For the last year, the script was, defense is saving the quarter while commercial drags. That script has flipped.
Specifically, industrial machine vision. This is basically robots looking at things on assembly lines, right?
Yes. Cameras and software that inspect products for defects. It grew single digits in Q4.
Now, single digits doesn't sound like a rocket ship, but compared to the double-digit declines we were seeing,
It's a massive pivot.
yeah, that's huge.
It is the signal the macro investors were waiting for. When machine vision turns positive, it means factory managers are confident enough to spend money on upgrades. And they specifically noted demand from the semiconductor sector for mask and wafer inspection.
And test and measurement. These are your oscilloscopes, your protocol analyzers.
Right. An oscilloscope creates a graph of an electrical signal. It's the stethoscope of the electronics world. They highlighted demand from auto markets, which is interesting, but the real nugget was data center power controls.
This has to link to the AI boom, doesn't it?
It does. I mean, everyone focuses on the GPUs, the NVIDIA chips, but to run those chips, you need massive, incredibly stable power delivery. Teledyne makes the high-end equipment required to test those power systems.
Make sure they don't fry a $50,000 chip.
Exactly. They also dropped a number that just blew my mind, 1.6 terabit internet traffic generation.
What does that even mean?
Well, it's the next speed frontier. To put that in perspective, most home internet is maybe 1 gigabit. This is 1,600 times faster. It's for the backbone of the internet, the hyperscale data centers.
And you can't just plug that in and hope it works, I imagine.
No, you need to simulate that traffic first to make sure the switches and routers don't melt. Teledyne provides the simulation tools. So they aren't an AI stock in the sense that they make the AI, but they are a picks and shovels play on the physical infrastructure that allows AI to exist.
I love that distinction. Okay, we have defense soaring, marine diving deep, and commercial waking up. But we need to talk about how they pay for all this. Teledyne is famous for their capital allocation. They call it the string of pearls strategy.
Right, it's why they are called a compounder. So let's look at the cash first. They generated $379 million in cash from operations in Q4 alone. Free cash flow was a record $339 million.
They are printing money, and they aren't just sitting on it. This is the part of the transcript that made me smile. They did a surprise buyback.
A $400 million buyback in Q4.
Now, usually I'm a little skeptical of buybacks. Sometimes it's just management trying to prop up the stock price.
Yeah.
But the timing here.
Oh, the execution was surgical. They bought back stock when everyone else was scared. The average price they paid was roughly $507.52.
And the stock closed yesterday over $623.
They made an instant return of over 20% on that capital in just a few weeks. It shows that management has a very sharp pencil when it comes to intrinsic value. They saw the market was wrong, they saw their own order book, and they stepped in.
That's conviction.
It is. But they didn't stop doing deals either. They spent about $850 million on acquisitions in fiscal 25.
So they can do both.
They can walk and chew gum at the same time. They mentioned the transponder tech carve-out, and just last week they acquired DD Scientific, a UK-based gas sensor manufacturer.
This is the string of pearls in action, right?
Yeah.
Buying these small niche companies.
Exactly. They aren't trying to merge with a giant rival. They buy these small businesses that make something very specific, like an industrial gas sensor, where the margins are high and the competition is low. They plug them into the Teledyne network and let them run.
And despite spending almost $1 billion on M&A and $400 million on buybacks, where's the debt?
Sitting at a very comfortable 1.4 times net debt, that is remarkably low for a company this acquisitive. It means they have massive dry powder. If a large target comes along, they have the balance sheet to take it down.
So let's put this all into context for the investors listening. What is the macro signal here?
The signal is that the industrial recession is likely over. When a company like Teledyne, which has its fingers in so many different supply chains, says that legacy drags like machine vision are stabilizing, you have to pay attention.
And on the defense side, it confirms the budget flushes aren't just one-offs.
Right. The loitering munitions, the satellite tracking layers, these are multi-year commitments. It justifies the premium on the stock. The compounder narrative is, fully intact.
Analyst sentiment was a moderate buy coming into this,
Yeah.
with a price target around 614. We blew past that in one day.
And that suggests investors are re-rating the quality of the earnings. The guidance looks conservative to me, honestly. Management at Teledyne prefers to underpromise and overdeliver.
It sets a very solid floor.
A very solid floor for 2026.
All right, we've covered the numbers, the tech, the strategy. Now it's time for our favorite segment. This is the part of the show where we put aside the responsible analysis and pitch a trade idea that is high risk, high concept, and strictly for entertainment.
And please remember, listeners, this is absolutely not financial advice. We are just brainstorming like a couple of analysts at a hedge fund lunch trying to impress the portfolio manager. Do your own work.
Okay, here's the pitch. We call this trade the omnipresent eye spread. The structure is long Teledyne, so TDY, and short a basket of the heavy prime contractors.
Okay, let's break down the logic. Why short the primes? Like Lockheed or Boeing?
Because the primes are in a knife fight. They are bidding on these massive satellite constellations and hull construction contracts where the margins are razor thin. They take all the risk on cost overruns, supply chain delays, labor strikes. It's a capital-intensive nightmare.
They have to build the metal, and metal is hard.
Right. Meanwhile, Teledyne is the picks and shovels of the space war.
I like that.
We call this the vampire squid of sensors trade. It doesn't matter which prime wins the satellite contract, doesn't matter who builds the drone. If that machine needs to see in the dark or if it needs to hear underwater, Teledyne gets paid.
It's a compelling hedge. You remove the political risk of who wins the contract, and you simply bet on the technological necessity of the sensor payload. The primes fight for the low-margin metal. Teledyne owns the high-margin eyes.
You aren't betting on the war. You're betting on the physics required to fight it. Long physics, short metal. That's the trade.
It certainly aligns with the data we saw in this quarter. If you believe the defense budget is going toward higher tech surveillance rather than just more tanks, this is how you express that view.
All right, let's bring it home. Recap time.
Teledyne delivered a record quarter. They signaled a major turn in the broader industrial cycle. The factory recession is ending. And they proved that their defense technology is sticky, high margin, and growing.
And the stock is up 10%, leverage is low, and their buyback timing was absolute perfection.
My final thought for the listener is to keep watching those margins in 2026. If they can maintain 24% while ramping up production on these new defense contracts, the stock has plenty of room to run.
Check the show notes for the ticker details and a link to the transcript if you want to dig in deeper. We'll see you on the next earnings break.
Stay curious.
And keep watching the tickers.